Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, just a heads up before I get into it. Chart Guys James is going to start doing some commodity videos as well on the weekdays. I'm going to be sticking to the weekends to try and keep some sanity from doing these what feels like every day for, I guess it's been over a year at this point. So it's going to be some different perspectives, some different styles of trading, and I think it'll certainly be beneficial in terms of, getting those different perspectives and some different tools in our tool belts. And I'll keep checking in over the weekends with the weekly recaps and things. So give James a warm welcome. But for now, here on natural gas, we had a big gap up open. The bounce continues with higher lows and higher highs. But as soon as we started to fill this gap to the downside, we know we don't have support built here because of that gap up. So look how easily the bears were able to dump through that on high bear volume, just right through support, and there's no support established here because of that gap up. So 2903 was key support. Red flag number one was breaking it right here, although the bulls did buy that dip on some solid volume. But then once we broke that level, the bears clearly taking control in the short term, and the gap will fill on the hourly down to 2828. So that will be a key support level. Lower highs and lower lows is what the bears want to see to head towards that level. And we have a bearish reversal candlestick on the daily time frame after that gap up. No red flags for the bulls. Once we fill that gap, if we fill that gap of 284, we'll look to hold the 10-day moving average support and continue to form higher lows and higher highs. We did fill a gap up towards 2946 and the high of today, 2952. So that gap did fill, and the bulls are trying to confirm that weekly bullish reversal candlestick, and we are off to a good start. Although it is red, we did see that nice higher low and higher high. So depends on how we continue to consolidate as to how this weekly candlestick is going to shape up, and also the inventory report on Thursday will be important as well. But as of right now, bulls maintaining as long as that 10-day moving average support holds. I do like the bulls to remain in control on this oversold bounce. So looking at UNG on the daily time frame, rejecting from the middle Bollinger Band resistance, we had that target of 714 to fill the gap, and we filled that gap by a penny. But now the middle Bollinger Band resistance needs to become support for continuation. Support, or the gap, I should say, will fill to the downside at 687. So keep an eye on that level. So 687, gap fills, and middle Bollinger Band daily resistance. And the weekly time frame, there's that follow through. But again, we're down at the low of the week because we've only seen one trading day. Bulls ideally want to fill that gap and head back up towards the high of the week to see really strong confirmation of this bullish reversal candlestick from last week. So that gap is kind of throwing things off in terms of the shapes of the candlesticks, but obviously the price action the bulls are pleased with, higher lows and higher highs. Personally, I would have exited today on this gap up starting to fill, and I probably would have gotten shaken out on that first candlestick right there. But either way, I would be out and looking for a re-entry after we see some downside towards this gap fill. So I appreciate you watching. And again, you'll be seeing James from now on the weekly video recaps. I appreciate you watching. Feel free to ask any questions, and we will certainly still be around as always.